Gather round. It's time for your Real Estate Chalk Talk with the Hittner Group at Coldwell Banker Burnett. Listen closely as your coaches discuss the culture, the economy, and the political scene, and how it affects your home and your real estate investments. Real Estate Chalk Talk is where you learn the science of buying and selling real estate and the art of living in your home. Your education begins in 5, 4, 3, 2, 1.
Hey there, welcome to the program. This is your Real Estate Chalk Talk. Good afternoon. HittnerGroup.com, Hittner Group, all one word. HittnerGroup.com, 612-627-8000, 612-627-8000. Give us a ring-a-ling-a-ling. We'd be happy to help you with your real estate needs. James Thovson is on the program. He'll be coming up in the next segment. We're going to have a couple of segments talking about storm damage, hail damage, and that process. I'm going through that situation in my house. I thought maybe our listeners would be interested in hearing how to go about doing that. Maybe check it out. Keith Reno has a house down in Lakeville. I sent him the name of a... did you get that? I texted it yesterday, the name of insurance or
yeah, I'm going to try to go back to
guy.
my old insurance company and make a claim on the roof from
Is
last
that right?
year.
All right. Well,
Let's see what we can get done.
see what you can do.
I broke the news earlier this week about a house. I was looking for houses in Inver Grove, Egan, up to $1 million, little acreage, you know.
Pole barn.
Yep, pole barn something. And I noticed a house on the market in Inver Grove, nice place, Rambler. And take a look at the owner of the property because I'm curious who owns the property.
Sure.
And it's this 33rd company or whatever it is.
What's that about?
So that's Adrian Peterson's house. So AP's house comes on the market, and this was about 10 days ago.
Okay.
And I'm like, oh, AP must be getting traded here. So I start, spreading it around.
AP or Delvin?
I'm sorry, Delvin Cook.
Delvin Cook.
Adrian
Okay,
Peterson.
yes.
Whoever. The running back.
Yeah.
And it's Delvin Cook.
Had the position right.
AP. It was like 10 years ago.
Yeah,
Not
dating
10
yourself.
days ago. AP. And so I'm like, oh, he must be getting traded because they couldn't work out a deal. Has houses on the market, a telltale sign. He's probably getting out of here.
Yep.
And then
maybe he got a big contract.
And 6 days later, the news starts coming out. They're cutting ties with Dalvin Cook.
He's got a gate because he lives not too far from me down kind of a back road that you take.
Yeah.
He has a gate with a Cook on it.
Oh, is that right?
Yeah.
Nice.
Yeah.
That's great.
Yeah, right off Akron.
Yeah.
There.
Yeah.
Yep.
So
that house is on the market. If anybody wants to go see that one, it's like 1.4 or 1.7 or something like that.
He lives close to a friend of mine. He liked to play loud music, apparently.
Is that right?
Yes.
Well, he has a nice tennis court, basketball court set up in the backyard.
Okay.
So a lot of outdoor activities there.
Yeah.
Well, you would expect that.
Yeah, for sure.
Yeah.
Okay, I want you to spell some real estate myth for me. So there was, I read an article this morning. You know how this news media, if it bleeds, it leads. And so the headlines, you have to read the article. Because if you read the headline, it's like completely different from the article. The article actually said that the headline wasn't accurate. Because it said homeowners lose equity in their homes for the first time in 10 years or whatever it was. Average equity is down $4,900 or something like that. Well, then you read further in and it says, well, home values are up 2%.
Yeah.
Year over year. It's like, well, that doesn't even connect with me. How can equity go down when values are up?
Right.
Right. So then the whole article talked about how home values are continuing to rise and all that stuff, and it's a blah blah blah, basically a garbage article, and it turns out this West Coast. It's the West Coast.
Yeah.
Where you got average sale prices of $1 gazillion,
right.
And so they're always the first ones that get hit, and anything 79% of the homes on the West Coast with a mortgage.
Yeah.
Have lost $4,900.
Well, I think if you want to sell your house right now, it's a fantastic time to do so.
It is.
You're going to get less activity than you did 2 years ago. You're probably still going to get multiple offers on the property. There's just not going to be 25. There'll be 5 or 2 or 6 or whatever it is. And it'll more than likely, if it's good, clean, move-in ready home, it's going to sell for more than asking price.
You've said it many times, Keith, that we're talking about politics as local. real estate is so hyper local.
Right.
You know, I mean, it just depends on the community. There are communities and neighborhoods in the Twin City market, the 7-county metro market, that have definitely lost value. And there are some people who bought a house maybe early last year, or in late 21, that maybe their house is worth, slightly less in some areas than it was at that point.
Yeah.
But the momentum is clear that values are continuing to increase at a very normal pace. I mean,
if inventory stays low like this and we get through the economic hiccups that we're having right now, so, through the political change, hopefully, of, how everything is, the direction that everything is going, if interest rates drop down, it would be insane again. I mean, you could turn the faucet right back on.
One thing I was reading from a economist for Realtor.com, he was, if interest rates went down, it isn't going to help. It really isn't going to help because there's no inventory. It will make more activity and all that stuff, but the units move through we have a structural problem in our supply.
I would disagree.
Wouldn't
with
we
that.
get more inventory if rates went down a little bit? Because that guy maybe with a 3.99 or something, they would be like, okay, we'll move if we can get an interest rate of 5.25.
Well, there's
something like that.
So yes, there's the elective buyer pool right now that's just like gone.
Right.
People that are like, oh yeah, I'll go buy the $700,000 house and sell my $450,000.
Yeah.
Like they're gone because the interest rate's at 7%. It just doesn't make sense financially. But also, we get right back into the situation that we were in 2 years ago, 5 years ago, where it's like, well, we got nothing to go to.
Right.
So it will spur more activity, but there's still that kind of logjam of where are we going to go to?
Right.
So at least you can start having those conversations again, though. Where right now we're not having a ton of, I'll sell my house for $500K and go buy one for $800.
Right.
It's divorce. It's
first-time home buyers.
First-time home buyers. It's downsizers. People moving out of state. Like those types of transactions, which are always there, are where most of the effort is spent.
Yeah.
And even that's so challenging because the inventory is low. Now, we did come up in inventory 300 homes this week, which is like the largest increase in inventory that we've had in quite some time.
Really?
But our inventory today is 3,000 homes less than 2019.
Wow.
So go back to pre-COVID, a more normal-ish market, and look at that inventory level the same week in time. We're 3,000 homes short from then. So I mean, we have a structural problem in our inventory supply that is trying to be filled by new construction. But they can't. Right now the existing new construction represents about 30% of the market. Well, that's twice as high as it normally. Normally it runs about 15%. It's at 30% right now. Existing new construction because they're just building them. And trying to fill that void and take advantage of that vacuum.
Right.
But they can't do it fast enough is the point. And the price point that they're building is not what's needed.
So how are these people, because in Rosemount where I live, I mean, there's houses getting built like crazy right now on the south side of 42 there. It's just like, where are all these people coming from and the price points? I don't know how people are affording these houses.
Well, same
new
thing.
construction starting at $650 with no finished basement and
with
deck
and
no landscaping and
1,200 square foot footprint 2-story.
That's just,
tight.
Thing is, you get these people that move into these houses too, and they get in bare boned, and then they don't know. I mean, if you want to have that thing look like the house that you drove by, the existing one with the deck and the patio and the finished basement, that's another $200.
Yep.
Right.
Yep.
Yeah.
Exactly
well, I do have a gal building new construction in Invergrove Heights right now, and the plan is to have the house done by November.
Yeah.
And she's coming in from out of state, so if there are inbound relocation transactions to be had, new construction.
They got to buy something.
New construction's a great option.
Yeah, because it's there, right?
Yeah.
Yep.
Yeah.
And we weighed the options. I mean, we looked a lot at existing properties. And ultimately, we just landed on new construction. So
do you think that we're going to see a lot of what we saw the last time the inventory ran up like this? The exoburbs became popular.
Yeah.
Because suddenly it's cheaper out there. So if you can go to Northfield, if you can go to south of Lakeville in some of those communities out there, Jordan or whatnot, it's just the land costs are down, construction is up there. There is some existing inventory. There was a very large movement to move out to those exoburbs, or do you think that what killed that is gas prices?
Right.
So, what's the weighing of that?
Well, that's like a community like didn't Elko New Market? That's kind of how
That's
it got
what
built
made them
up,
going.
right?
Yeah.
So I would think, with the cost of prices, that people will have to do that.
Gas is 30% higher than it was 2 years ago, though. So that's even though it's come down a little bit, it's still 30%
Right.
higher than it was 2 years ago. Groceries are up. Cost of living is up 16% from last year. 16% for
Inflation.
normal, everyday food and housing.
Ugh.
Unreal. This is your Real Estate Chalk Talk. We'll be back with James right after these messages. I asked James Tholfsen to come into the studio today to talk a little bit about insurance and about, in particular, hail damage, because we have such a huge hail damage area, I guess, of the network. I was just spent some time down in Texas with my sister, and she was talking about actually on the television, they had an entire channel devoted to the hurricane watch. And it's just, the hurricanes are coming through.
Are they close to the coast there?
I asked her that. No, they're not. She's in Fort Worth. And I said,
But they could come busting through there, I
she
suppose.
said it's the pre-hurricane storms and the post-hurricane storms is what causes the damage down there. Tremendous hail damage and tornadoes. So that's really what it is: rain, hail, tornadoes. And so then I was thinking, well, I got hail damage on my house. I had someone that was visiting, actually, who was a roofing contractor, and he just came over to visit. We're chatting. He said, "You realize you got hail damage on your roof, don't you?" No, I didn't. He said, "Yeah, I'll go up there and take a look at it." So he comes down. He said, "You have a lot of hail damage up there," and so that starts the process.
Right.
Okay. So then I am going through the process, and I want James just to kind of describe, if you will. First of all, give your contact information so people know who you are and where you're from.
Sure. James Tobson with the Preserve Group, mypreservegroup.com. You can reach us at 651-728-4334.
Independent insurance agent. So I thought, well, that's just good because I get an independent. The first thing the guy asked was, who's your insurance company?
Right.
And so you tell him who the insurance company is, and why do you ask that? And he said, well, some of them are good to work with, and some of them are just really tough. I mean, they just deny. And so you really need to have somebody actually on the roof with the adjuster to figure it out. So we started that whole process. So describe to me, Vince, your experience of how, from the first claim that comes in, when do you get the call typically? Is that at the very beginning of it, or is that usually after someone's already been out there?
The majority of my clients will call me first before we file the claim, and I coach them to do that. And the reason why is just what you did. I want a professional, independent contractor to come out and look at the roof to assess it, to say, hey, you've got damage, Keith, we should probably file a claim, versus letting the guy that knocks on the door from
Texas.
A different state, we call those storm chasers, let them on your roof. Try not to let them on your roof. Get a trusted contractor on your roof. Let them tell you have hail. Once that process is done, then I have them get back to me, and then we proceed. We'll file the claim. That claims adjuster will schedule a time to come out and look, and then obviously it's in everyone's best interest to have the contractor and the adjuster on the roof together so they can communicate and look at the same thing.
Do you find the same thing that Keith was alluding to, that because you're independent, you're writing with various carriers? Are there carriers that you go, gosh, I wish this client wasn't with XYZ company versus ABC company?
To be honest, I haven't had that experience yet.
Okay.
That's not to say it won't happen. There are companies out there.
So that's just fear mongering from Keith.
No, it's factual. There are certain carriers out there, whether they're they're not as well known.
Okay.
They get their financial rating A+, A++, and some of the companies that aren't as financially strong may be more difficult to work with when it comes to claim time.
So when they're on the roof, what are they looking for exactly? Because I look at it and thought, well, it looks fine to me. And they're up there saying, oh, no, you've got to have, what exactly are they looking for?
Sure. not an adjuster. This is what I know, not being an adjuster or a roofing contractor. They're looking for hits per square. The square is how they measure the roof, and I don't know exactly the math on what a square is, but when I say a hit, it's part of the granules of the shingle that have come off or been, you can see with your own eyes, and that obviously that diminishes the quality, the strength, the rigidity of the shingle, and therefore it's not going to do what it's supposed to do. So they're looking for a certain amount of damage in a certain area, depending on the age of the roof. The newer the roof, they want to see more than the older the roof. They're not looking for as much.
When I spoke with him, he said the storm date was May 12th, 2022. May 12th of 22. So that is like a certified storm or something like that came through. And so we're in the process with this. Call the insurance company, had the adjuster come out, did what you said, had a local company up on the roof with the adjuster, and got the adjustment back. And I'm like, because I had no idea of what stuff. So they come back and said, oh yeah, you need a roof, you need siding, and you need your windows replaced. I'm like, what?
Holy cow. I'm
like, windows replaced? What are you talking about? And so I'm outside looking at the window, and it's just to me, I'm looking at the windows, they look fine to me. He's, well, you see here, some little dents in the windows, and I have metal clad windows. I said, well, okay.
It's time. Yeah.
And he said, no, he said, you don't realize when that gets dented like that, it breaks the bond between the wood and the metal. And he said, you may not see it now, but moisture will form between now the cladding and the wood, and it will rot that window from the inside out. So he said, if you don't...
You're like, my windows are already doing that.
Yeah, I said, my windows shot already.
I've never maintained my windows.
Yeah, but they're not, though. The windows are perfectly good. And I'm like, okay. And so then I had a question about we get the money back or the check. They mailed me a check. And the insurance or the builder or the contractor said, well, that's not enough money. He said, it's not enough money. So...
It's enough to get going, though, right?
Well, I don't know. I mean, I put the check in the folder because it's like if I cash that check, it's kind of like you've accepted it, right?
Right. So the way that they typically pay out, I can't speak for every company, but they typically give you a lump sum, okay? And whether it's 50%, 60%, 70%, a lot of it's based on the age of the roof. And then once the work is done, they give you what's called recoverable depreciation. So your adjuster or your agent should have explained that to you, saying that you're going to get a check. Let's use simple math. Let's say it's $100,000. They're going to give you $50,000 up front, and then once the work's complete, they're going to give you the recoverable depreciation.
What does that mean, though? I have no idea what that means.
Sure. Well, it's just so if it costs $100,000 to do his roof,
the other 50.
It's the other 50.
Yeah,
it's
the contractor will provide then like here was the bid, and they have that too. But here's the rest of the money, and part of the insurance policy has a little right.
Yeah, every time I've ever had a payout, it's always it's a lump sum here and then a lump sum once the work's completed. It's not usually 50-50, but
when you say the word depreciation, it makes me think that they're going to depreciate, not give as much value,
right?
And that end check is going to come in short.
Sure.
So the bill's $100,000, and that check we gave you 50, and now we're going to give you another 30.
Sure.
And the rest was depreciation.
But the recoverable part of that. Okay. So there's depreciation on the roof, and then the recoverable part. So you're recovering that.
Yeah. How do you determine that? Is the question? How do you determine?
They're going to make you financially whole. They're going to make you whole. They're going to give you full replacement costs to replace it, assuming the policy is written correctly. But that's just what they label the second half is recoverable depreciation.
Well, that's good information.
So they're going to make you whole.
I have recoverable. The guy said, "Oh, good, you've got 100% replacement." Blah blah blah. And I was like, "Okay, that's good news to me." So then I get the quote was $107,000 or something like that. Well, they sent me a check for $80,000. And I was like, okay, that's a long ways from 107. So where is the gap? How is the gap?
Well, there should be a letter with that $80,000 explaining once the work's complete. We'll send you the rest, the $27,000 less your deductible. It should say that on there without obviously looking at it.
So, Keith, here's a lesson for you. When you get that check with a accompanying letter,
read the letter.
Read the letter.
month.
Lesson for me.
Explains.
Yeah, lesson for me.
Explains a lot.
Or
of
call
stuff.
your insurance agent.
Skim.
Now the contractor did come back and he said, well, even the 107 isn't enough.
Okay.
Because it's not enough to do the windows.
Sure.
So, then it means now it's another round of a window expert came.
Right.
That's what he does. He's the window guy.
Okay.
So he came and looked at the windows, and now he is in the process of writing up a report about the windows. And apparently in Minnesota, if so many % of the windows are damaged, they have to replace all of them. Because you can't have on one elevation, for example, you can't be forced to have mismatched windows.
Okay.
And in my case, they said, well, they don't make that window anymore. So the window that is like that is now a size, new and improved, fancier, smashier. But that's what we're going to have to replace it with. And if we only do a couple of them, then they won't match. So now they're in that dialogue with, I'm interested in your experience how that conversation goes, because I haven't heard anything. We got to go out to break. This is your Real Estate Chalk Talk. We'll pick it up on how you get your windows replaced when we come back from break. Real Estate Chalk Talk brought to you by the Hittner Group, hittnergroup.com, 612-627-8000. That's 612-627-8000. And we'll be right back with James after these minutes. Hey, welcome back. Thanks for staying with us. This is your Real Estate Chalk Talk brought to you by the Hittner Group at Coldwell Banker Realty, hittnergroup.com, 612-627-8000. That's 612-627-8000. We're speaking with James Thosum, and we were talking about hail damage and window replacement. And when we went on a break, I was just mentioning that on my house, they said the contractor said not enough money to replace the windows. They brought out a window expert that this is what he does. He looks at windows and he writes up the report to present to the insurance company, and then they do the negotiation with the insurance company based on what current law is and all that stuff. How does that I don't even know how that conversation goes, because I've heard nothing. It's 2 weeks ago and I've heard nothing.
Sure. Majority of the claims that I've experienced, it's been mainly roof siding, but when the windows get involved, sometimes they'll go, I don't want to make it sound terrible, but round and round and round, right? They're going to go, your contractor is going to have to come back what they call a supplement to the adjuster saying we found more damage or, additional damage that your original settlement didn't cover. And it does take more time. It does take more people involved. It'd be nice if the same adjuster could take you from A to Z. It doesn't always work that way, but it isn't uncommon when it's...
So a second adjuster would get involved, or
I hope not.
Or something,
hopefully not.
Okay.
Hopefully the first adjuster can handle it all, but in some occasions, if he's not giving you the response you want, you may have to
escalate a little bit.
Exactly.
So you said something in the first segment that I wanted to spend a couple minutes on, and that was, you said if your policy is written correctly. I was speaking with a gentleman just this past week. He's with another company, and that company was giving him just a portion of money. That it's like an 8-plex unit, and he's giving him just a small amount to cover the roof. And I said, well, what kind of insurance policy do you have that doesn't have replacement cost coverage on your roof? So talk about writing the policy correctly to be adequately covered in the event of a hailstorm.
Sure, absolutely. More and more insurance companies are going to what they call a payment schedule, which means that based on the age of your roof, they may pay you 70% instead of 100%. It's a way, A, for you to save a little bit of money on your premium, but B, for the insurance company to save money on their end.
Right.
In Minnesota, we have a lot of hailstorms. I think we had 4 last year. The insurance companies are having losses. They're losing money and having to raise premiums, which nobody likes. I don't like that, but that is the reason. So a lot of carriers are going to that payment schedule. There are a few of them that only do replacement cost, but a lot of them are having that option. And sometimes it's out of my control based on the year of the roof. Some carriers won't even touch it if it's over 15 years old. They will either decline the risk or they'll non-renew you once they get to a certain age. So it is a problem. It is an issue because the losses are just they're significant in Minnesota.
Interesting. Well, and I saw an article this morning when I was reading that State Farm is now pulling out of the state of California. So pretty interesting, just because of high claims. And they're going on in this article say, I wonder what's going to happen in Florida and some of these other big hurricane states if major carriers are just going to say, we're out.
They had a big run-up on tent home coverage that they tried to tried to insure blanket policies on tent structures on the street.
Really? Think that was it?
Really?
California?
Yeah, and the homeless encampments and things like that. They wanted to have homeowners insurance coverage on the tents.
Really? Who's paying the premium on that deal?
The state.
Oh, my God.
Supplemented by federal tax dollars. You didn't hear about that?
No, I didn't hear about that one.
No, I'm joking.
That's all. Oh,
He's
that's
all joking.
outstanding. Thank you.
But hey, good news. Canada.
Well, what happened? Like my insurance premiums went up 30% this year. You know,
Ooh, you should shop that.
Well, you know, not now because I'm in the middle of a claim. They don't. The next insurer is going to say, "Yeah, he's a good risk because he's got a new roof on."
New roof on there. We love it.
Yeah, he's good. So then, what happens then if you have a high claim state? Everyone on my street now. Then my next door neighbor just got a new roof put on. The neighbor across the street's getting a new roof put on. And I'm assuming that those are different insurance companies, but your point is well taken there. I mean, everyone on the street's getting a new roof,
Right.
and you know, some are paying more or less than the other. But it's good fodder for talking to the claims adjuster because it's like, well, obviously they had damage across the street, so I must have damage as well. But what happens when
You would think. One would think.
One would think.
I've made 3 claims on my roof.
Really?
And my neighbors have gotten 2 roofs. Literally all of my neighbors have gotten 2 roofs since I've lived there, and I've been denied every time
Oh.
for hail damage.
I'll
He's
give
got
you
the
the name
nicest
of
roof.
my contractor because they're pretty good. They've been pretty good so far. Okay, so how does that impact then? We've got certain companies like Calvin was saying, they're just saying, okay, we're not writing any more policies in the state. Do they cancel all the policies, or they wait till they run out, or just say they're not going to renew, or what happens?
They can't cancel them. They can non-renew. They can pull
They
out
just
of the state.
non-renew. Yep.
Yeah, they typically non-renew. They can't just cancel them. But yeah, I don't have any carriers I work with. I foresee that happening. But the rate increases are real. They're coming. Whether it's 10%, 15%. Again, nobody likes it. I don't like it. But they have to stay profitable. Otherwise,
They're all gone.
there's going to be a problem.
But I've noticed that as I'm driving around the country and flying into Dallas and going to Fort Worth, and all the big buildings, all the big tall buildings have insurance company names on them. So,
Right.
you know what I'm saying?
Might be a reason for that.
There might be some profit in it. As an independent agent, then, how do you assess that? Does it matter, point in case that, you know, I'm having my roof replaced, so I'll have a new roof. We've got new siding putting on. I'm kind of vacillating between putting on LP Smart siding or a James Hardy siding, which is all concrete. They're saying that, well, the concrete siding, because it's fireproof, doesn't burn, that my insurance rates will be better. Does that factor in, really?
I've not seen the siding. The roof is huge. Every carrier, when you have a new roof, we want your business,
Okay.
and you'll pay significantly lower premium, maybe 50% of what you're paying to have a new roof. The siding, I haven't seen that adjust the premium based on the quality of the material. It'll adjust the rebuild cost of your home. So if you have a nicer, a higher priced siding
Exterior,
than what you had, then it might modify that. But I don't see that it's going to. There's no discount for a new siding. There's any of the carriers that I've ever worked with.
And there's no discount for going from one material like a vinyl siding to a concrete siding? Nothing in there. Okay, so that advertising campaign was a lie.
That was a lie.
That was right on their brochure.
It's news to me.
So can I shift gears a little bit? I just want James to just touch on. We've known each other quite a while. In your past life, you were a captive agent. Can you just explain the difference between captive and independent now, and why you made that switch, and why you started your own independent agency?
Absolutely. So the word captive just means I had one product to offer all my clients, and so if you didn't fit in that little shoebox of their target market, you weren't going to get the most favorable premiums. And so after 7 years, it made things more and more difficult to grow and meet my goals. And so I went independent because now I have a lot of different shoeboxes, different sizes, different types, different zip codes. And so I have a lot more opportunities to say yes than to say no, and it makes everybody a little bit more happy, and helps me serve more clients' needs.
What do you do when you run across, because on the mortgage side, obviously credit is such a big deal. Does credit come into play on your side? And if somebody's got, so that question number one. Question number two, if they have banged up credit, how do you address that? And do you have carriers that don't judge based on credit?
Sure. So we call it an insurance score, but it is directly tied into their credit. We're not pulling their FICO. It's not going to do anything. But they know. They can tell based on a bunch of different factors what that score is, and it does impact their premium. I don't know specifically a certain carrier that doesn't take it into consideration. I use a comparative rater, and so I punch in the information and I just go with the top 3 that have the lowest premium. And so there isn't a magic company that is best for poor credit versus one. They all want the best of the best, right? We all want that 850 client with 0 claims, but that's not reality. So no, I just work with the companies and see who spits out the best, because it's not always going to be company A or B, because they might not like the zip code that buyer's buying in. So
okay, who do you sell for the most right now in your independent agency? Is there a couple companies that you really like? There's
a handful of companies that are really good right now that have been good to my clients. Nationwide, Safeco, Travelers, those are all good ones. There's tons, many more. Those are the ones that I've found a lot of success with.
Okay. And one of the things I know that you do such a good job is you're very consultative. So we have a minute left. Talk about that a little bit, about your approach when you talk with a client.
Sure, absolutely. Well, I want to get to know them a little bit. Obviously, building a relationship is important. Understanding what they do for an occupation, their family, knowing a little bit about them so we can properly cover them. The cheap insurance is not good for anybody. We want to make sure that we have the right limits of liability. We want to make sure we have an umbrella policy. We want to make sure that if something bad happens, we're there for you, and that if anything really, really bad happens, they're coming after the insurance company and not your personal assets. We want that bucket of insurance to be bigger than your personal bucket.
Give your contact information one more time.
Sure. James Tovson at Preserve Group, mypreservegroup.com. You can reach me at 651-728-4334.
All right, we got to go out and pay some bills right now. This is a Real Estate Chalk Talk with the Hittner Group at Coldwell Banker Realty, 612-627-8000, and we'll be right back.